The Parliament yesterday cleared the new banking regulation bill that brings under the purview of India's central bank, that's the Reserve Bank of India, 1,482 urban and 58 multi-state cooperative banks. And the idea behind doing so, as per the Finance Minister Nirmala Sitharaman, is to bring these cooperative banks under greater scrutiny directly under the RBI and also protect the interest of the depositors and the customers of these cooperative banks to avoid a PMC Bank-like situation from cropping up yet again. What's at stake here? Remember that in June, when the Cabinet had first cleared this bill, we had Union Minister Prakash Javadekar stating that there are 8.6 crore depositors who have almost 5 lakh crore rupees deposited in these cooperative banks, and this bill will sort of give assurance to these depositors. So what exactly does this bill mean for you, the customer, the depositor, with these cooperative banks? Well, firstly, if, let's say the bank does end up becoming stressed, and mind you, the numbers are pretty scary because the financial status of 277 urban cooperative banks is weak. 47 cooperative banks already have a negative net worth. So if in case one of these banks' financial situation deteriorates sufficiently and, it does find itself in a PMC kind of situation, then the RBI will obviously take over. It will place it under a moratorium. And that means that, yes, there will be restrictions on the operations of that bank. However, the depositor can still withdraw money. This is the bill that, this is the power rather that the bill gives the RBI, that it can sort of work around restructuring the bank without necessarily placing a moratorium on the withdrawal by depositors. And this is a big positive for depositors, because do remember, till date, PMC Bank's customers are not being able to withdraw the entire amount that is deposited with the bank. Second, of course, the RBI will be able to sort of, scrutinize the affairs of these banks in a better manner, keep track of all their operations. Because again, I'll go back to the PMC Bank example. The whole reason behind the fall of PMC Bank was their, their huge exposure to one highly indebted and problematic group, that was HDIL. Because HDIL did not repay PMC Bank in turn could not honor withdrawal requests by depositors, which led to this entire situation. So RBI is going to now keep a clearer and more closer check of all the operations. Number 3, if the RBI thinks it needs to do so in the interest of depositors, it will supersede the board of directors of a multi-state cooperative bank, which again will be in the interest of depositors. Fourthly, the cooperative bank is now allowed to lend on the security of its own shares. Usually, the old depositors of these cooperative banks do tend to get shares from these cooperative banks, maybe a small amount, but now the cooperative bank can lend to you if you deposit their own shares as security. And finally, free to open a new place of business outside of the city, village or town, or even change the location of the bank without requiring RBI's permission, thus being able to serve the depositor, the customer as well, in a better manner.